Good day, everyone, and welcome to the Premium Video Newsletter for June 11, 2013. Lots to get to today. First, the overnight markets were very volatile today, or last night, as the Japanese stock market was down once again. The Bank of Japan decided not to take any steps to spur the country's economic growth. They're not going to take any action. Bank of Japan voted to stick to its current bond buying program, disappointing those who had expected new measures to help the Japanese lagging economy. The Japan's Nikkei stock index lost 1.5% overnight, and that's the market that we follow every night. There's further uncertainty coming from central banks easing off their efforts to support the global economy. The U.S. stock market did not take this news well, and coupled with the uncertainty that the Feds may be ending the bond buying program in the next few months, sent the stock market down sharply at the open. While the stock market regained its losses, it dropped down for a second round right after funds initiated a few buying programs prior to lunchtime. Looking at the intraday chart of the stock market, you can see how we're well below the resistance level once again. I'm currently short the SPDR, ticker SPY, which follows the S&P 500 stock market index, and that's what you're seeing right now on the screen. I'm holding this position till the index hits the 1600 level and will evaluate at that point if I should continue holding a portion of my position or liquidate and wait for another short setup that will be triggered if we hit the resistance area once again. On a daily chart, the stock market looks like it's headed down to the 1600 level, and unless there's some unforeseeable news, we should be there within the next 72 hours or so. The trading right now is primarily random and volume is fairly low as well. We're drifting and waiting for reports that are coming Thursday and Friday of this week. The 10-year bond futures contract broke out below the low, and I'm currently short this market. I've been anticipating a short position in the 10-year bond futures contract for about 2 weeks now, and finally we broke the low. The stop loss, or the buy stop, is at the resistance level of 131.17 30 seconds, which is just a hair above 131.5. And I will keep you updated as the position develops. If this breakdown continues, it will have a major, I repeat, a major implication on interest rates. Looking at our current position, MGA hit a new high today and is well on its way to hitting the $70 price level, which is our target. Maintain the position and place a limit sell order at 70 in case we have some funds accumulating the position in the next few days. The other position we're holding is PFE, and it's in our profit zone, but is behaving randomly, similarly to how the stock market is behaving. I would hold the position short, and within a few days, I expect funds to unload the position. I took a look at the sector, and it's beginning to lose strength once again. Hopefully, within the next few days, we will hit our profit target to the downside. On a positive note about Pfizer, there's a competing stock, ticker LLY, and is having a 4x4 setup to the short side today. I won't take this trade because I don't want to double my risk, but you should see it for yourself. It's a good indication that you're positioned the right way when your position's biggest competitors are also signaling trades in the same direction. Avoid taking trades because correlation is too high between these two companies. And what you're doing is really just doubling your position when trading multiple stocks in the same industry group. We entered and exited a position quickly today. As a matter of fact, I think I broke my all-time record. The ticker symbol was VMW. The stock hit our sell price and quickly reversed to hit our stop level. It doesn't happen very often, not at all. It was a quick 2-point loser. If you follow our newsletters for some time, you know that our losers occur much quicker than our winners. The winners are much bigger for the most part, but losers are part of the game. There are over 12 short setups today and very few long setups. This tells me that the market is choosing directional bias and is getting ready to trend again. Take a look at these 3 setups for the 4x4 strategy that are setting up tonight: KIM, CSX, and WDAY. Sell each 10 cents below today's low. If you're triggered, I will update you tomorrow morning on the stop loss and the exit strategy. That's it for today's newsletter. I will update you either tonight if we have another crisis in the East, or tomorrow morning if everything stays calm. If there's nothing urgent happening during the session tomorrow, I will focus tomorrow's tutorial on relative strength sector strategies. Have a great night, everyone.